Hello and welcome to Ticker Tapes. It's Wednesday, which means it's time for a look at the crypto space. Bitcoin bounced last week, trading up to a new one-month high at $22,877 as it did so. The largest cryptocurrency by market cap sold off from that high point. However, it still managed to rack up gains of 12.26% on the week, and more to the point, it posted 5 consecutive positive sessions, something we haven't seen for some time. Risk assets have come back in favor with investors who now think that the Federal Reserve will raise interest rates by a maximum of 0.75% at its next meeting. Though crypto prices may be stabilizing, levels of trading activity remain well below their peaks, and that means further cost-cutting at crypto-centric businesses, such as the Gemini Exchange, which is backed by the Winklevoss twins. Gemini trimmed its workforce by 10% just over 7 weeks ago. However, it seems they may need to wield the axe once more, with sources and documents suggesting that its headcount could soon fall from 950 to 800 employees. Cost-cutting is also becoming a fact of life in what was once the fastest-growing area of the DeFi and crypto markets, NFTs or non-fungible tokens. Leading NFT marketplace OpenSea has fired 20% of its staff in order to save money. Crypto miners based in the U.S. are using as much energy as all of the homes in the city of Houston, the New York Times reports, citing data from a congressional investigation. 5 Democrat members of Congress and Senator Elizabeth Warren, a well-known critic of the excess energy used by the mining industry, have called for the companies to report their energy usage and resulting greenhouse gas emissions, and they have written to the heads of the Environmental Protection Agency and Department of Energy about the matter, saying that a surge in crypto mining is also significantly raising energy costs for local residents and small businesses and has added to the strain on the power grid in states like Texas. The environmental impact of large-scale crypto miners is under scrutiny because many of these operations use power generated almost exclusively from fossil fuels such as coal and gas rather than from renewable sources of power such as wind and solar. What's more, several of the largest miners are expecting to expand the number of mining rigs that they deploy in the USA. Higher energy prices that may be driven in part by cryptocurrency mining are likely to be an election issue that will play well with voters in the run-up to November's midterm elections. Binance may be trying to clean up its act to impress financial regulators, but it can't escape its legacy issues that easily, it seems. The Dutch Central Bank, or DNB, has just fined the company $3.2 million for operating in the Netherlands without the correct registration, something the central bank made mandatory in order to crack down on potential money laundering risks. The fine was imposed on Binance back in late April, but the exchange appealed the decision. However, that appeal fell on deaf ears, with the central bank saying, Binance has a very large number of customers in the Netherlands. As the exchange is not registered with a regulator, it does not have to report crypto transactions, thus a large number of unusual transactions may remain out of sight of the investigating authorities.